Welcome to the Greater Victoria Real Estate Show. I'm Jane Johnston, realtor here in Victoria, and this is a show where we cut through the noise and talk about what's actually happening in our local market.
I'm Andrew Plank, also a Victoria realtor. We'll talk stats, timing, neighborhoods, and what we're seeing behind the scenes.
And I'm Jen Lowe, mortgage broker. I'm the numbers person of the group, and I'll chime in with the mortgage side.
Each week, we break down what the market means for you.
All focused right here on Greater Victoria.
No hype, no pressure, just honest conversations, local insight, and practical advice.
Let's get into it.
Hello, everyone.
Hello, and welcome to the
yeah.
Victoria Real Estate Show, everybody. It is June 2nd, and we're doing our monthly market update up to the end of May. I'm Jane Johnston with the Briar Hill Group, and I'm here with...
Yeah, hey everybody, Andrew Plank here with the Vibe Collective at Royal LePage.
Jen Lowe, mortgage broker with Dominion Lending Center's Modern Mortgage Group. Nice to see you guys.
Once again, another week, another report.
You got it.
So, I think we're all busy. Should we just get right into? We've got some stats and an update from Jen on mortgage, and that's our show. That'll be our show.
Awesome.
Sounds good.
Okay, so Jen, what's happening?
Well, we've had an update here that we seem to be going into what they're calling a technical recession, first time since 2020. So the effect that will have on interest rates will be interesting to see. Definitely seeing a bigger push right now on variable interest rates. And I thought I would just touch on, there is two different types of variable rates or variable rate mortgages to be aware of. One has a fixed payment and the other one has a fixed amortization.
Right.
Not lenders offer one or the other. They don't give you the choice of which one you want. But it's important for people to be aware that there are two options available. So what I do is I ask my clients, what's your preference? Would you be interested in keeping your payment the same throughout the term? Or are you okay if the payment fluctuates when interest rates change?
Two questions. One is, What is a technical recession? But also, so you're saying there's two different flavors to these, to the variable rates options. Is there generally a difference? Like, is one of those two options generally a higher interest rate, or does the interest rate doesn't really change?
It's what pays down the principal faster.
Yes, so I know, but I'm just wondering if one of those two options tends to be a more expensive option, or if it doesn't really make a difference.
Oh.
The fixed amortization variable rate mortgage currently has a lower interest rate than the fixed payment variable rate option.
Okay. Regardless of lender.
Yes. Yeah.
Overall, on average. Okay.
I mean, there's a significant spread and difference in interest rates from a fixed rate to a variable rate right now. But clients, they're not too sure about going with the variable rate. That means their payment could change. So then I always make sure that I explain, well, there is another option that you can have your payment stay the same, but still take advantage of those lower rates.
Right.
So,
okay.
Yeah. So right now, a variable with a fixed payment is about 3.8. And a variable with a fixed amortization is 3.6 to 3.7.
Okay.
So on $500,000, what's the difference in monthly payment?
Well, $15 per every 100,000. So I would say 15 times 5.
75.
75.
Interesting. What would you pick?
Yes. Right now, I have been on a fixed payment variable throughout after COVID. My mortgage is up for renewal next year. And it has actually paid off a significant amount of my principal, because I have not, the payment hasn't changed and interest rates have been coming down.
Right. And that's the
So
gamble, right?
that's right. Yeah. And people do need to understand at some point throughout your 5-year term. I mean, it's always important. Google Bank of Canada interest rates to see how often historically interest rates do change.
Yeah.
But like right now, they've held steady the last 4 meetings. We are not expecting a change in the interest rate at the next meeting on June 10th. But at some point, yes, interest rates will change.
Okay. Well, that's interesting to know that there is a difference in when someone says I'm on a variable rate mortgage. There's actually 2 different flavors to that, very distinct flavors to that type of mortgage, which we knew, but I didn't realize there was also it also affected a difference in interest rates. So you pay a bit of a
Depending on what your
premium.
preference is. Yeah.
Yeah. You pay just a slight premium to be able to have fixed payments on a variable mortgage.
And if you just go straight to your bank, they're not going to let you know that. They're just going to tell
Right.
you whether they're offering the fixed payment or the fixed amortization.
That's one thing I notice a lot of clients don't really notice. They don't, well, if you don't know that there's options, you don't know to ask for other options.
I
Yes.
also find like generally people are just looking at the interest rate. They're not looking at the terms and conditions. So when you're
Sure.
refinancing, you really need to look at it as a whole package.
Yes. Yeah. I can't reiterate that enough. Now back to your question on what is a technical recession.
Yeah.
A technical recession is when an economy experiences 2 consecutive quarters of negative economic growth.
Okay. And how is
And
that
it's
different from a
technical.
true recession?
I think it's technical because it has to do with maybe the fluctuations in oil and gas prices regarding a weird war.
Perhaps. I'm no economist. So yeah,
Right.
yeah. I have a real surface level of this information, but yeah, that's the definition.
Okay. Okay, great. And if we want to find out the difference between a technical recession and a true full recession, please Google it.
Yes.
That's
Yes,
what Google
there
is
we
there
go.
for.
You have to be
Okay.
careful what you bring up here because you're gonna be called on it.
I'm going to be asked as well. Yeah, we're all going to be asked. Okay, so this is the last 7 days. We're going to go through the last 7 days and what's happened with that. And then we're going to also look at the full month of May and see how things played out by the end of the month. So in this past week, we had 423 new listings go live versus 472 the week before. We had 166 properties go pending versus 207 the week before. So both these metrics in this past week are down versus the week before. Same also with price decreases, 198 price decreases, slightly down from 221 the week before. And then bucking the trend here, we had 90 properties expire. And again, we talk about this because we're straddling the first of the month when a lot of people do expire. We had 90 expireds versus 61. You guys.
So we're going to see a lot of people, I think, who've been on the market for 3 months now, like coming on the beginning of March, wanting to potentially, or the end of March, wanting to bid adieu, feeling frustrated if their property hasn't sold. So I think that's why we're seeing some expireds and price decreases. They're ready to move.
Of my listings, I'm noticing, and I'm also hearing from my colleagues that activity is pretty slow for listings, especially condos and strata. But single family still is doing pretty good in the general price point, but we are at a really, well, we're going to get to this, but really high inventory levels as well. List to sell ratio over the last 7 days is down slightly at 39.24 versus 43.86 the week before. And total active listings. Sorry, this is okay. Yeah, month to date. Jen, do you want to take this one?
Sure. We're at 713 net unconditional sales for the month of May, compared to 758 last year. And inventory for new listings coming in is 1789. That's actually not that much difference. So the difference is the sales are down. So they're down about, new listings are down about 50, and sales are down a little more than that. Okay, so total active listings are at 4,029. I don't think I've ever seen it that high since like before 2019. And
time.
total active listings last year were 3,717, which I thought was high.
Yeah, breaking that 4,000 mark. And even last year we had high inventory. So breaking 4,000 that's a lot of listings. And another reason, we have just way more listings than we have buyers for right now, is the challenge.
And I really feel that buyers right now are looking for value because we listed a property, and we're listed sharply, but on Peggy Ann. And, you know, we got 10 showing requests for today. So.
Great. Jen?
One quick point on with condos. I mean, I've just recently helped some clients. Price point is under 400,000, and their mortgage payment is really honestly now at par of what they'd be paying for rent.
Right.
So that'll be interesting to see if, you know, more people do want, you know, it's an opportunity for those first time home buyers to get back into the market again now.
I mean, I would,
point.
It's a great point, but I would also add to that, like, you're talking, the mortgage payment is equivalent to what they'd be paying for rent, but you still need to add in care and feeding, upkeep on the property, strata fees, taxes, those items. But that being said, you still got you're buying the security of owning a property, being able to do what you like with the property, not getting kicked out or rent evicted or any of those things, and the value over time going up. Whereas rents go up over time, and you end up in a much better position owning. Jane?
I remember before 2019, must have been like 2015 or 2017, when I was thinking, okay, we're at a point now. So I think we'd been in real estate 10 years, and we were at a point where this is what was happening, is that I realized the prices were going to come down because all of a sudden it was cheaper to rent than it was to own. And so then more people would go towards, so it's like a bubble, like a balloon that you squeeze on one end and it gets bigger on the other end. So I feel it's going the other way, that renters now will be able to afford to buy because the prices are coming down. So that, I mean, it's a natural ebb and flow, I think.
Yeah.
The tension always causes that tensegrity, that tension of, you're right. It's a flow. It's kind of like a low pressure area where the high pressure flows to the low pressure. And when cost of rental is higher than the cost to buy, of course, you're going to have more people considering that. Right now, what I'm seeing is on top of good prices, like reasonable prices, because condos are soft, for example, you also have great selection. And so you can go and pick and choose and find the location you're looking for, the configuration you're looking for at a reasonable price. And I find it so frustrating that when buyers have this overwhelming amount of selection, they get that confusion where they cannot make a decision because they've got this abundance of choice. And yet buyers will grab anything they can when they feel like the market is moving up and getting away from them, just so they can claw into the market. And it's frustrating to watch because at that point they're making decisions just to grab something, and then they end up in a property that may not be perfect for them or as ideal for them. So it's an interesting psychological event, I guess, to note. Okay. Anything else to say on these guys?
Nope.
Okay.
I'll take this one away. So 2 years ago, we were just under 3,400 in total active listings. You can see we're up over 4,000. We did peak last year at 3,800 in June. So I expect we might actually go up again this month. Just statistically, we're more likely to peak in June than any other month.
Yeah.
And
Yeah.
then things should be settling down after that.
Yeah. So, I mean, we could get up as high as, 4,200 listings, probably not quite there because we should start to see this curve soften. But yeah, we're going to, reach a peak at some point, and we'll start to see it come down again as people either decide not to sell, take their property off market, or the number of listings per week starts to go down, and yet the buyers still continue to buy over the summer. So we will see. That same graph, but with the two pieces of data parsed out, is here. So essentially, we have here the number of new listings coming on, as well as the number of sales associated with it. And so we can see here we've got pretty high number of this is listings, and then sales is the lower the line. So yeah.
So it was interesting this year, or actually this year and last year, I was just talking to a seller, and I was saying when they indicated that they might want to list early in February so they could get a head start on the market, I suggested to them that maybe that's not always the best strategy now, that we see how the market's doing, because it felt like it was a very slow spring for listings in terms of sales. And it felt like it's been picking up lately, but still the ratio of list to sales in February still wasn't that strong, relatively speaking, to what it's been in the past. So it's just interesting to look. You're really looking at the delta between the new listings and the sales. So what's the ratio happening here? What's the change?
Yeah. Yeah.
So listings are going up higher right now than sales are. And you can see that in the next graph, actually, because it shows, do you want to take it to the ratio? The ratio is fairly flat, actually. So
the ratio between those two is the listings to sales to active listings ratio. And it has been fairly flat. Is it? Yeah, it's maybe gone up just a little bit. It's hard to say, but over the last couple of months, it's actually been fairly flat. And up from January, where it was almost in buyer's market territory. But we kind of gotten back into kind of the middle of that range that's considered balanced. Yeah. Still, though, I feel like we have, again, a lot of inventory, especially in the condo market. These numbers we're seeing here are not split up between condos and single families and townhouses. So we're not providing you the data that really speaks to that particular subset of property, and condos are better. Yeah, Jane.
So interestingly, I just did a deep dive into all three sectors of the market. So single family, condos, and townhomes. And surprisingly, one thing that's changed, especially in the townhome market, is that it's increased and it's more mid-level. So we were seeing pre-COVID lots of very expensive townhouses showing up in places like Fairfield and Saanich, but now we're seeing sort of mid-level townhouses showing up anywhere from 700 to 900 in the West Shore and Saanich. So we're seeing a lot of choice now for townhomes, and I think that what that's doing is it's taking a bit of the pressure off the housing market, but also it's allowing condo buyers to move up without having to pay for a house.
Yeah, it's a big jump from a condo to a house. So if you're going up the property ladder, the next rung can often be, rather than a bigger condo, maybe it's a step into a townhouse. So, yeah.
Yeah.
Okay. So this just shows the benchmark price of or the average price of a single family home over the last couple of years. And we do see, from April to May, a bit of a drop in that average price. Although, as you can see, these go up and down over time. Really need to see like longer term on this to really determine a trend. But we did have a bump up in values from December 2025 through February. And this actually, Jane was talking about, not listing earlier for sale, but I actually was recommending the opposite to my clients. Like, let's get going early in the market. And I've definitely felt the market heat up over time, but I don't know that it's currently as hot as it was earlier.
I think
when it was more
I think though
unknown.
I think it depends what area you're in, because the West Shore has been slow, whereas North Saanich has done well, Saanich has done well, but some areas have not done well this year. They're just slightly down over where they were last year. So this number actually for May 2026 bears evidence of that. So we're seeing, I think, if you were to look at it like in a trending line, I think we're fairly flat, maybe going up a little bit over 2 years.
So interestingly here, condos have been fairly steady for the last number of months, all through this the spring market, with maybe a little slight rising trend from a peak though in January.
To me, this is a reflection of new construction sales of properties that have been on the newer end that have sold recently. I don't think the resale condo market is as strong as what this is evidencing.
Resale I don't think that the new construction condo market is that strong. I'm hearing overbuilt and people having a hard time selling. Are you hearing of people selling out or doing well with their new construction, new condo construction?
There's a lot of choice on the market, but I was talking to the realtor who's got the listing at the corner of Helmkin. I think it's called the Royale, and they were selling about one a month, new construction. So, but I think the prices have come down compared to where they were 2 years ago. And I think relatively speaking, but I think it's impacting the market. People will pay more for new. And also sometimes realtors report the sale with the GST in it, which you're not supposed to do.
Well, that does impact that, but I just don't know that there's enough new construction condo sales to really make too much difference in this. But maybe it's, Jen, did you have something you were?
Yeah, the GST rebate is an interesting thing that we're dealing with right now as well, on new construction, whether it's condo, townhome, or single family home. But it's a rebate. It's not a refund per se,
Right.
or so when you use that word rebate, and because it takes potentially minimum of 6 months to get that rebate. It's an interesting process for whether or not we can finance it or not, and who the rebate's going to.
Right. Good to know. Good to watch. Bro,
so
townhouses.
This is what we were talking about. Sorry.
Yep. You take it.
This is what we were talking about, there being more of a steady market. Before, when we reported on townhouses, and I'm talking years ago, we saw a lot of variability, but I think we're seeing more of a steady line around the 800 to 850 mark. And I'm thinking specifically, there's row townhouses that are just in this price range around interurban, Craigflower, and down into Colwood. And there's a lot of those sales. People are going for them.
Okay. Yep. So we'll just really quickly go through this, but we also look at what's going on in the different areas of Victoria, just to see what's been happening. And we'll just look at the regional summaries here on the right, rather than going into a lot of detail here. But between 2026, really a 0% change in the overall trading area of the benchmark price of a single family home. Whereas in the core regions, they've gone up by 0.3%. In the West Shore, they're down by 2.8%. And in the Peninsula region, they're up by 4.3%. So we're seeing softening in West Shore, a bolstering in the Peninsula, and those balance each other out along with a bit of a drop in the core to make an overall 0% difference on average.
And the condos in the Peninsula region are primarily in Sydney as well as Central Saanich, and they're view condos and houses.
View condos,
so,
yeah. Although we're talking about, this is single family
Houses.
homes right now,
Yeah.
but yeah. So we won't go into the real weedy details on these. Guess we don't see the actual benchmarks for condos for the general area. So I'm going to skip those. Don't think we need to get into that. Jean, unless you want me to go in there, and you're smiling there, but
No, it's okay.
Yeah.
I'm just getting a little dizzy.
Okay. From the moving around. Yeah. Okay. Well, that was our monthly market update. And so we just like to get a bit of a, circle back on and a rehash on what happened in the last month, and try to get an idea of where things are going, so we can give you folks a bit of a head start.
Where do you think things are going, you guys?
I mean, I am feeling a little less positive about the market than I was a couple months ago. I'm very busy right now, and I've been very successful lately in getting my buyer clients into some great homes. But the listings are not getting the activity we would like to see in order to really feel like we can have some positivity around getting folks, prices that they are expecting or hoping for, based on the evaluations that we did earlier. So that's a bit of a concern, and just seeing these high inventory numbers and the low number of showing requests, and anecdotal from conversations with other colleagues, feels like we are moving maybe into a slower summer.
Mm-hmm.
So just comparatively, I remember during COVID, if you were looking for 10 properties, you were lucky to see one. Now, if you're looking for 10 properties, you could probably see 20. So that's the difference in the market.
Yeah.
Right.
Jen, how about you, with people coming into your realm and your sphere, asking for mortgage approvals and so on? Are you feeling like you're down for this time of year, or you're about average, or are you really, because you're the bellwether for us?
It's that uncertainty, like when you go back to COVID times, or what, like when there's that uncertainty in the world, which there has been with what's happening in the Middle East, and inflation numbers, and what's happening, what the media portrays, that people just hold their wallets that much closer, understandably so. You're not wanting to spend money when you're not sure what's going to happen next.
Yeah. Right. So certainty, people are more willing to open their wallets, but right now, too many unknowns, and nobody wants to expose themselves to the largest real estate investment of your life, especially a new purchase for a first-time buyer, when they don't know if they're going to have a job, or if the cost of a banana is going to become $5 a piece, or if they're going to be able to afford to drive their car to and from work.
Yeah. And I will say, I think you said it actually earlier this year, Jen, that every time it looks like we know what's going on, then things change, and then we have to adapt. So we just have to learn to be flexible. And I think also maybe trust a bit in the process that things will improve over time.
Yeah. But if things have not been improving, and that's been the standard constant for a while, That's the expectation people have. And we need to get to a time again where we have some consistency for a period of 4 to 6 months with no major shocks to the system and maybe overall trend of an improving world, before people start to say, I think I'm going to come back out of my shell and start looking around and making some big financial decisions. But that being said, if you are looking to downsize, if you think that there's a risk to your job and so forth, downsize, consolidate your debts. There's never, it's never a bad time. It's just could be bad time based on your own circumstances. Right?
Right.
So
there's always options.
Yeah.
Yeah.
Okay, guys. That's great.
Okay.
I think we are about done here. So just remind everyone that we are the Greater Victoria Real Estate Show, and that we would love if you could subscribe to our show. If you could give us a like from now and then, give us some of your comments, and please again remember to share. That's really, really helpful to us and to the show. I'm Andrew Plank. I'm with the Vibe Collective at Royal LePage, and we are at 250-360-6106. And I'm laughing because Jen is making all kinds of faces and so forth. And I'm at info@andrewplank.com. And we heart you too, everyone.
Jen.
I am Jen Lowe, mortgage broker with Modern Mortgage Group through Dominion Lending Centers. I can be reached at 250-217-4925. Email is jen@jenlowe.ca, and my website is jenlowe.ca.
And I'm Jane Johnston. I'm with the Briar Hill Group at Remax Camosun. You can reach me at 250-744-0775. My email is briarhillgroup@gmail.com. And my website is briarhillgroup.com. And don't forget to follow me on Instagram and check out our groovy new listing on Peggy Ann Crescent. We have some fun video that we took with that. All right, so
Awesome.
we are on every Tuesday afternoon. We are recording it now so we can go live and give you better quality. And if you have any questions, though, please post them. We would love to hear from you. We do read what you send us. And don't forget to check us out on YouTube at Greater Victoria Real Estate Show. All right, you guys, see you next week. Take care.
See you guys next
Bye,
week.
everyone.
Thanks for joining us on the Greater Victoria Real Estate Show.
We're here weekly, bringing you up-to-date insights on the Greater Victoria real estate market.
Make sure to follow and subscribe on YouTube, Facebook, and wherever you listen to podcasts so you'll never miss an update.
We'll be back next week with more clarity around what's happening and what it means for you.